Okay, let's go ahead and post transactions for the month of July. We'll do something different this time. In July, we will post everything using General Journal Entries interface. Again, by now you're familiar with debits and credits, so you should be able to do it, follow along with me. I will not be using our debits credits window when I have my General Journal Entries interface right here, debit and credits, right? So I will only use it if we come across interfaces that do not break it down like this. But again, you can post practically anything using General Journal Entries. It does have its limitations. You'll see them during reconciliation and then during some reports. But again, it's a good way to get it done if you're in absolute crunch mode and you got to do it, and you'll see how much faster it is. Again, it comes with limitations, right? So speed comes at a cost, but let's get it done. I want to show you. And again, this time debits and credits are right here, so follow along through that interface. All right, the date is correct. So what's happening here? Our credit card account balance is going up because we're borrowing some money, so that's a credit. What else? Our expenses on food purchases are going up through debits. Right, so here we are. Have another one. All right, we're gonna. This one is also credit card. Okay, balance on the credit card is going up because we're borrowing, and our expenses on restaurant supplies are going up. Right, so here we are. Next one is our checks, but again, unfortunately, we can't enter it, so we're going to just enter it right here. And here we'll enter invoice. Slightly different. Again, expenses going up. In this case, it's cleaning expenses. Right, so here we are. Here we are. Good to go. Oh, the date. Double check the date and go through the fields. This was a credit card, so in this case, so we have our credit card account. And we have our expenses on drinks purchases going up. Right, debits, credits right here. Everything is good. Right. Okay. Oh, in this case, it's a check. So we're going to enter check number. Again, in this case, it's our bank account. It's going down, and we now by now we know that bank account is an asset, and it's reduced to credits, and it's right here. All right. One more here. We have another check. And we're going to enter invoice number in the memo box. What do we have here? Oh, that's the one where we're going to enter multiple expense accounts, right? So let's get on it. So we have our rent. We have our insurance. We have our registration fee. Alright, so again, you see everything is in balance. Everything is good to go, right? We have debits and credits. They're all balancing out right here. Okay, so we're going to save and close, right? And that completes booking invoices. Okay, let's go ahead and book credit card receipts for July. What do we have? We have our gas station. 7/10/2020, 698.63. Alright, so what do we have? We have our credit card balance going up. Alright, and what is it? Fuel expenses are going up, right? So here we are. Again, we know debits and credits are right here, right? It's in balance. Save new. Have another gasoline receipt. Credit card balance is going up. Alright, and then we have fuel. Alright, good to go. Debits and credits are in balance. Alright, we have online market order. Looks like it's a mix, right? We bought some books for business that we got to read up on, and then we also got some books for kids and toys for kids. Could be presents, but it sounds like that would be personal, right? So alright, so we're gonna go ahead and fix that one. Actually, we're gonna do it in 1 and 2. So this one would fall under, let's see, what would be the best for repairs, uniforms, dues, subscription, depreciation. Well, let's create a new account, right? I mean, we currently don't have one. This is a good opportunity. This would fall more under training, right? Training. We currently don't have one. It could fall under dues and subscriptions, but it sounds like it's training materials. So let's go ahead and create one. Alright, we're going to set it up. It's going to be an expense account. Alright, remember we're using account numbers when we do that. So let's go ahead and assign an account. Well, we'll assign it in a second. I'll show you a better way just to make sure that it's in the right position. So let's go ahead and save and close. Alright, again, the cool part about QuickBooks is that you can go into chart of accounts and see. So here's our training materials. Let's see, where would it fit the best? Let's put it maybe office supplies, telephone expense, right here. Somewhere 62,900. Okay, so 62,900. So the cool part, see, it's right here now. The cool part about using numbers is that it's much easier, as you've noticed, to have a conversation with an accountant about it. Instead of saying repairs and maintenance, you can send them, essentially a chart of accounts and say 62,500 or 62,400. And it's a much easier way to communicate. And we'll talk about it in future videos, but we just created one. Okay, so we have our training materials. Alright, so I happen to do the math behind it, and I know what these two add up to, including tax. So I'm going to just punch in the numbers. Alright, and we also have a draw essentially, right? Since it sounds like we bought some items that are personal, right, that becomes a draw. It decreases our equity. What else happened? Well, we used our credit card, right? So our credit card balance went up. And here we are, we're in balance. So what's happening again? Expenses going up. We just created this account, training materials. We got some books. Right, management books, that's our training materials, 62,900, we just created that. We also have some items that we bought for personal use, I don't know, gifts for friends or something. So again, we did our draw because it reduced our equity. We took money out of the business. And then we increased our credit card balance, right? So that went up through credit. So here we are, the entry is in balance, we're good to go. Alright, and then we have our credit card payment. Again, there are multiple ways to do this one. There's also a certain button under banking, and we'll cover it in the next one. But this is another way to do it. So again, debits and credits are right here. So what's happening? Again, we're paying down our credit card, right? So our liability is going down. We owe less money. But we're paying it with cash from our bank account, so our bank account is going down as well. So bank account is an asset, we reduce it through credits, and liability, credit card account is a liability, we reduce it through debits, right? So here we are, we're done booking invoices and receipts for July using this alternative method, which is, in my opinion, substantially faster.